Hey everybody, this is Dave Littlejohn. It is Friday. It is the 12th of January. It is a heck of a day in the market. So much so I had to break out the green shirt because we have seen such a remarkable move up, well over 1% for the week, 2 weeks in a row that the markets have continued to be up. It's really something. In fact, by most of the ways that I measure, it is quite overbought. What does that mean when I say that? Well, so imagine a bell curve, right? And bell curve has a distribution, and there's the C students are in the middle, right? The B students and the D students and the A's and the F's. Okay, well, the A students are the outperformers, and so that's where you get what we call like 2 standard deviations from average. Standard deviation is this measure that we like to use in the financial field because it's a way to say, well, how probable is this to occur? If it's 1 standard deviation, that's pretty typical, but 2, it's getting less typical. And so we're out beyond 1.5, almost into the 2 standard deviation territory for quite some time. So the market's been going up and up and up, and you have to start to ask yourself, I wonder how long this party can go on. Well, here's the story that I know, okay? Think of lemmings for a minute. Now, it turns out it's not really true that lemmings do this mass suicide thing, but we've all heard of it. They all jump on and they all run together and they all off the cliff they go. Well, let's pretend that were the case, and those lemmings are representative of investors. So everybody gets really excited, they pile on, they run to the edge of the cliff. The trick is, when do you stop? Okay, well, you could stop now, but the run may go on for a long time. The cliff may not be for quite some time down the road. The challenge on this one is that when we look at a lot of internal metrics, things are economically looking good. We had several bank stocks that came out and reported earnings beats, so they exceeded the expectations the street had set for them and the analysts were expecting. We have seen unemployment remain low, but we've not seen significant wage inflation pressure. That is actually relatively important. It's the wage inflation that starts to drive actual inflation, which motivates the Federal Reserve to hike interest rates faster. Right now, they're on a nice steady course, which means the market has pretty telegraphed expectations. So when the market thinks it can see what's coming, it tends to behave a little bit more predictably, and that's what's going on, allegedly at least. So up we go. Where we stop, nobody really knows. I will tell you this, when I do analysis and I look at where the numbers are leading for the year, strangely enough, this thing can actually go significantly higher. There are lots of rationales for that, but I think that we'll see some volatility between now and there. Here's what I do know. So far, politics are getting ignored. Despite what things are said or not said, the market has gotten to a point where it just isn't going to get that panicked about it. So until we see news that is beyond rumor, the market is going to seems to be shaking it off. So good news for investors for now. So we'll continue to monitor it. I'll continue to keep you updated. But the theme is run with the lemmings, but don't jump off the cliff. So we'll do that until, so we'll keep you posted. But anyway, if you've got questions, as always, don't hesitate to reach out. Give our office a call. You can reach us at 541-375-0898. You can also send us email at info@littlejohnfs.com. And until next time, this has been David Littlejohn and your weekly market update from Littlejohn Financial Services.